Yes, people, a very, very happy morning to all of you.
Good morning, sir.
What an energy. So, guys, we're doing this topic called as consolidated financial statement. And whatever topic we were discussing so far, from that, I'm taking a slight deviation. And I'm heading to one question which is given in your study mat, illustration number 5. To be very honest, we have completed the entire consolidation except CPL. We are ready to discuss consolidated profit and loss account. How do we prepare? So, but before that, I thought this question will finish it off. A lot of people do not understand this question and they try to leave this question in choice. So today's class, people, alone I'll upload in YouTube. So anybody who is planning to skip this video, or rather not video, question, can see this video and get the understanding of this question. Can we start? Now, mark this question, super duper important, nice question. It says that Variety Limited holds 46% of the paid up capital of VR Limited. Who's the holding company and who's the subsidiary company? No holding company, no subsidiary company. Lakshita is very smart. Very good, very good, very good. To become holding and subsidiary, there are two conditions to be satisfied. Any one of the two conditions to be satisfied. First condition is you should have voting power more than 50%. Second is power to compose. Power to compose. In this question, there is no mention about power to compose. Eliminate that point. So if I have to call Variety Limited as a holding company, they should have stakes voting power more than 51%, which is not so. So it is 46%. So can I say these are minority?
Yes.
So Variety Limited holds 41% stake of paid up share capital of VR Limited. The shares were acquired. Which means VR Limited did not issue the shares originally to Variety Limited. It was issued to somebody else. From them, they've acquired at a market price of 17 per share. Any problem? No problem. The balance shares of VR Limited. Can you please tell me how much percentage? Out of 100 percentage, if 46% is held by Variety Limited, remaining 54 percentage. The balance 54 percentage shares of VR Limited are held by a foreign collaborating company. It is held by foreign collaborating company. Any problem? A memorandum of understanding, MOU, has been entered into with the foreign company providing for the following information. So this MOU is entered between whom and whom? One party is for sure this foreign company. One party is foreign company. So foreign company has entered into MOU with whom? It is with Variety Limited. You will not get to know that until you read the next 3 points. Since I've done this, I know this is a MOU with Variety Limited. With Variety Limited. Who's Variety Limited? That shareholder who's holding 46% share, and this MOU has been executed by foreign companies holding 54% stake. So between them, there's a memorandum of understanding. Let's understand what does this MOU says. I'm just reading the question. I'm not explaining. Let me complete reading the question alone. The shares held by the foreign company will be sold to Variety Limited. Oh my God. How much shares is held by foreign company? 54% stake held by foreign company will be sold. So if foreign company is selling the shares, who is buying the shares? Variety Limited. So Variety is already holding 46% share. Plus if he acquires 54% more shares, then 100% shares belongs to Variety Limited. Now VR Limited becomes wholly owned subsidiary of Variety Limited. After this acquisition, Variety Limited now becomes officially the holding company and VR Limited the subsidiary company. And VR is 100% subsidiary company, means wholly owned subsidiary. Now, let's read further. The price per share will be calculated. Why this price per share is required? Because foreign companies holding couple of shares. To come back to this point, the question says that below, the paid up share capital of VR Limited was 20 lakh divided into 2 lakh equity shares. So 2 lakh equity shares are totally issued by VR. In that, how much shares are there with foreign company? 2 lakh shares into 54%. Please tell me how many shares are held by the foreign company? 1,08,000 shares multiplied by value per share. This is the total amount they want as sale consideration. Sale consideration. Sale consideration is from whose point of view? Seller's point of view. The same thing will become purchase consideration from the buyer's point of view. So basically, we're going to try to calculate the purchase consideration. What is the amount that is required to be paid by variety to the foreign company for selling the share? So price per share has to be fixed. Now, how to derive this price is what this question is trying to dictate. The question says that the price per share will be calculated. It should be calculated how? By capitalizing the yield at 15%. Now, this is a clean bold. People do not understand this point. Capitalization term we have learned somewhere already. Yes, 2 times. One in 12th, second in CA Foundation. In the goodwill chapter, we came across various formulas to calculate goodwill. Simple average profit method, weighted average profit method, super profit method, capitalization of average profit, capitalization of super profit. So the term capitalization is coming from the roots. So again, I'll discuss what is capitalization. And second, people get confused. What is the meaning of yield? Yield means what? Return. The return that they want is 15%. So this is nothing but people. Capitalization of average profit ka concept you studied, no? When you capitalize average profit, you get total capital of the new firm, total capitalized value of the firm. Same thing is asked here. I'll discuss again in depth. Don't worry. I'm just reading the question. One more time. The price per share will be calculated by capitalizing the yield at 15%. Now, what is the yield here? Yield for this purpose. This purpose means what? For the purpose of selling the shares, for transferring the shares, the yield will be 40%. 40% of what? 40% of average pre-tax profit of last 3 years. So people get confused with what is pre-tax profit. Nothing. Average profit of last 3 years. This statement, hundreds of times you have studied in 12th and foundation. How do you calculate average profit? Last 3 years ka average. Last 4 years ka average. That is what they have told. So average profit of last 3 years. Which profit? Pre-tax profit. So 3 years ka profit is given. 3 years ka profit is given. I'll add all the 3 years ka profit. Divide by how much? 2, sir. 2, sir. No. It is simple average. So in numerator, how many items you added? 3. The same thing will divide by number of items, 3. You'll get average profit. But they're telling that we will not take the entire average profit. Whose average profit ka 40% we will take. 40%. Don't calculate. Now your focus only should be on understanding the question. Solution also, you don't copy. I will do the entire solution. You just observe and get the data. Because you're learning for the very first time. Simultaneously, along with me, if you do it, no, you'll not get the data in your mind. Every single word is important. So please pay attention. So last 3 years ka profit, I will do average. Whatever answer I get, 40% of that is yield. That yield I have to capitalize at the rate of 15%. So what this means, you'll understand when I do the solution only. As of now, you'll not understand that much. Can I proceed?
Yes.
So A point talks about how do I value the company. A point talks about the valuation of the company and what is the price per share that we have to fix to collect from the variety limited. So foreign company has to sell the shares. So what is the selling price per share? We have to calculate that. So point number A is helping us to calculate this price per share. Okay, let's go to point number B. The actual cost of shares to the foreign company was 540. What does this line mean? The actual cost of the shares to the foreign company was 540, which means when this foreign company originally acquired this 54% stake, no, this they acquired by paying 540. So this is cost of acquisition for the foreign company. Okay, not okay. So this is purchase cost of the foreign company. The profit that would accrue to them would be taxable. Okay, before that. In point number B, first line talks about the cost price. Point number A talks about the selling price. Point number A talks about the selling price. So from the selling price, if I minus the cost, what will I get? Profit. I'll get the profit. Now they're telling that profit is there. No. When the foreign company is selling the shares, they'll sell at profit. That profit is subject to tax. How much tax? 30% tax. 30% tax. The tax payable will be deducted from the proceeds and Variety Limited will pay the amount to the government. So what are they talking about? What are they talking about? All of you have done income tax? Okay. In income tax, is the concept of TDS over?
Okay.
Just started. Okay. So what I'll do is, though I've discussed what is TDS in foundation. Where we discuss this foundation? Debentures. Where in debentures? In the context of interest on debentures, we discussed TDS. So I did a short explanation there. But since you're giving me shocking, gloomy faces, so I'm again thinking to Again, I'll think to revise this topic in a very nutshell manner. Okay, not okay. So basically, we have to derive TDS. Now, what is TDS? We'll discuss in short. Not now, when I do the answer. So point number B talks about, what is the cost of acquisition of the shares by the foreign company. With that, I'll minus the sale value, I'll get the profit. And that profit is subject to 30% tax. That information alone is given in point number B. Nothing more, nothing less. Okay, not okay. Okay. Let's go to point number C. Out of the net consideration. Now, what is meaning of net consideration? No. सब करने का बाद का मतलब क्या होता है?
सब करने के बाद net consideration.
What is the meaning of net consideration here? Selling minus cost is profit. Wrong. Now, this is where the understanding goes wrong. Sorry. So, TDS from what will you deduct? Profit.
Net consideration से selling price हो गया sir और तो
Selling consideration.
Paji's got the right answer. Again, I'll elaborate what Paji said. Out of the net consideration, people get confused. Say, what is the meaning of net consideration? Out of the net consideration, 50% would be remitted to the foreign company immediately. 50% immediate settlement. And the balance will be unsecured loan repayable after 2 years. Means I'm going to pay the remaining part after 2 years. Until that, I'll keep this money as loan in the company. Okay, not okay. Okay. So point number C talks about purchase consideration ka disbursement. How the disbursement is happening. How the settlement of the PC or sale consideration happening is what is discussed in point number C. I'm telling you, this question is nothing. It's a problem when you're doing this question for the very first time, no? When somebody is not that properly explained, you might feel this question is, something big, something very unique, which is very difficult to understand. Once you do the solution, no, you'll find this so easy. It's just a matter of doing it for very first time. Now, I'll discuss when I do the solution. Now, further, the question does not stop here. Piyush, it says that the above agreement was approved by all concerned for being giving effect to on 1/4/2001. So basically, whatever the approvals are required for transferring of shares, all the approvals, legal procedures has been taken care of. On what? With effect from 1/4/2001. On this date, the transaction of purchase sale is taking place. Further, now, the total assets of VR Limited as on 31st March 2001 was rupees 1 crore. Total asset of VR. I'm talking about the subsidiary company. Subsidiary company ka asset worth is 1 crore. It was decided to write down property, plant, equipment, PPE by 1,75,000. So my question to all of you, this 1 crore of asset is at the book value or at the fair value? It is at the book value. If I reduce 1,75,000 from that, I'll get now the asset which is equal to the fair value. Current liability of VR Limited as on the same date is given 20 lakh rupees. 20 lakh rupees is current liability. From total asset, if I minus current liability, what will I get? Net assets, which is nothing but share capital plus reserve and surplus. The paid up share capital of VR Limited was 20 lakh divided into 2 lakh equity shares of 10 each. So much we have read. We don't know what is the requirement of the question. We are reading. But what do they want? They want you to find out goodwill or capital reserve. Oh my God. So ultimately, this is goodwill CR only. Last 10 class, 12 classes, what you've been doing? Calculation of goodwill CR. Now you're a pro. That is what you're supposed to do. Calculate goodwill CR to Variety Limited on acquiring whole shares of VR Limited. Now, this is what is a twisty point. Should I do goodwill calculation or CR calculation only to the extent of acquisition of 54% stake, or it should be on the whole? It should be on the whole. Got it, not got it? Now, getting the question understood, understand the question plays a very crucial role. If this is done properly, 50% of your job is over. Remaining 50% effort lies in only doing the solution. So, reading the question in true spirit, understanding it in true spirit, processing the answer in true spirit. If this is done, 50% game over. So if this is clear, I would like to go to the solution. Okay, not okay. Now, online people, okay, not okay. No response, online people.
Okay, sir.
Sale consideration. Sale consideration is a term used by foreign company because they're selling the shares. So what for selling the shares, if I give shares in consideration, what I get is called as sale consideration. Same thing becomes the purchase consideration for the person who's buying the shares. So if I say this as sale consideration or purchase consideration, does it matter? No. I want to know the sale value. How do I do this? Total number of shares of VI Limited multiplied by percentage of holding by foreign company. So in short, if I write number of shares held by foreign company, any problem? No. Multiplied by selling price per share. Number of shares held by foreign company. Do we know or not? Yes. How? So 2 lakh shares of the VR Limited total is given. In that, 54% is held by foreign companies. So how many shares are they holding? 1 lakh 8,000 shares they are holding. Now what I need is multiply by the selling price. To calculate the selling price, we will take the help of point number A. Point number A. So I'm coming back to point number A. We'll go very slowly. There's no hurry. The price per share will be calculated. The price per share, now we have to calculate how? By capitalizing the yield at 15%. Now, what is the meaning of capitalization of the yield? What is the meaning of capitalization, first of all? Capitalization means what? They're telling that 15%. What is 15%? 15 by 100, which means that I want a 15 rupee ka yield. Yield means what? Earning. For every 100 rupee invested. I'm talking in a very common, sense or a general sense. I want an yield of 15%. So what does it mean? 15 rupees if I want to earn, how much should I invest? 100. Got it, not got it. Now, I want to earn 60,000 rupees. If this is the yield percentage, what is the total investment that I have to do? So 15 rupees is the yield. 15 rupees is the yield. And for that, the investment that I have to do is 100 rupees. How do I get this? 15% means 15 by 100. 15 talks about the yield. 100 talks about the investment. This is basics. 15 rupees is my yield for every 100 rupee of investment. If my intention is to earn 60,000 rupees at the rate of 15%, what should be my investment? Cross multiply. 60,000 into 100 by 15. We call this as 60,000 divided by 15 percentage. If you do, you'll get the same data. This is called as grossing up. This process is called as capitalization. When you do a reverse calculation, normally what do we do? I have an investment of, what is this amount? 1,80,000. Iska kya hai? Let's say I have an investment of 4 lakh rupees. 4 lakh rupees I have extra money. I want to invest at the rate of 15% per annum. So how much will I earn? We say 60,000. No. This is normal scenario. This is a normal scenario. On investment, when you apply the percentage, you get the return. What is capitalization? When we go in reverse. So we fix that, no, I want this earning at this percentage. In that case, how much should I invest? This process of going reverse from the profit to the investment, it is called as capitalization. Okay, not okay. Correct? No. Now, why this is required? For example, I know my monthly expenditures. After all these expenses, I need this much savings. So I make up in my mind that, okay, my monthly expenditures are 1.5 lakh rupees. I still want a saving of 2 lakh rupees left after spending 1.5. So what is my total earnings supposed to be? 3.5 lakh rupees. Yes or no? 1.5 lakh rupees is my monthly expenditure. After spending this, still I should have a saving of 2 lakh rupees. So how much money I need? 3.5 lakh rupees. So if I want 3.5 lakh rupees per annum, I'm taking per annum. If I want 3.5 lakh rupees per annum, then how much money I should invest if the return is going to be 10%? If the return is going to be 10%, 3.5 lakh divided by 10%, how much it is? So 35 lakh rupees, if I invest at the rate of 10%, this is the earning I'll get. So some people, what they do, no, they set a target of what is the monthly, quarterly, half-yearly or annual income they want. And based on that, they do reverse calculation and decide how much money to invest. Got it, not got it. To do the reverse calculation, two data is required. What is the earning that you expect, yield that you want? plus what is the earning growth rate percentage. These two we should have. If you have these two, I can get the total amount to be invested. Okay, not okay. So here they're telling that the yield at 15%, the rate of return is 15%. I want to capitalize this return and derive the total value of the company. Total value of the company will decide the per share value. Per share value. How it is, I'll discuss in some time. So for that, I said two data is required. To do capitalization, two data is required. One percentage. Second, I need the target profit. I need target profit. So the next line says that yield for this purpose means profit for this purpose is going to be so and so. Got it, not got it. So that profit what I get divide by 15%, that is the total capitalized value of the company. That is the total capitalized value of the business. This is the same thing that you studied in the goodwill topic, which is nothing but capitalization of average profit. What is the formula for capitalization of average profit? Total capitalized value of the firm minus capital employed. If you do, you'll get the goodwill. In that, how did you do the total capitalized value of the firm? Average profit divided by NRR. Average profit is this profit. NRR is nothing but yield. If I do this, I'll get total capitalized value of the firm. Means what? What is the worth of the business today? What is the worth of the business today? We will get that. Okay, not okay. What is average profit? This profit what they've given no is nothing but on an average we've been earning so much in the past. And we expect that this is what they will be earning in the future also. So we're trying to calculate the future maintainable profit. So using that as a base, we're trying to derive the worth of the business. Using future profit, we're trying to derive the worth of the business. That much worth of money he wants today for selling the shares. Got it, not got it. So now, I'm coming back here. I've just noted down the facts of the cases for your revision. Variety Limited already owns 46% of VR Limited. Yes or no? Yes. Remaining 54% is held by a foreign company. Now, Variety Limited decides to acquire the remaining 54% stake and make VR Limited its wholly owned subsidiary. Okay, not okay. What are we asked to do? We are asked to calculate goodwill and capital reserve arising on full acquisition. 100% acquisition when I do, what is the overall goodwill CR? Now, for that, what do I need? I need calculation of purchase consideration. I need purchase consideration. Either you say purchase consideration or sale consideration, doesn't matter. In short, I want to know what is the total money that we have to pay to foreign company. How do I decide that? Total number of shares of VR Limited multiplied by percentage of share being sold. This is given in question 2 lakh. Percentage of shares being sold is how much? 100% shares of the company, 46 held by Variety. So remaining 56% is being sold by foreign to Variety. 54%. If I multiply these both, how much will I get? 1,08,000. Now, what is the sale price per share? This is what you have to derive. And for that, I've taken the help of working note number 2. Okay, not okay. Now I'm going to not working note 2. It should be working note 1C. This is working note 1C. Chalo, no problem. I'll change it in the document and give it to you. Before I calculate, there are certain things that I have to know. First, I want to know what is the yield, what is the expected return of VR Limited? What is the yield? How much yield they want? The question says that yield for this purpose is nothing but 40% of the average profit of last 3 years. So what is the profit of last 3 years? 30 lakh plus 40 lakh plus 65 lakh divided by 3. Uska 40%. So average profit of last 3 years into 40% of that is the yield, that is what they're expecting. So 30 lakh plus 40 lakh plus 65 lakh divided by 3. How much will you get? 45 lakhs you're getting? Okay. 45 lakhs ka 40% is how much? 18 lakh. Any problem? This is the average earning. This is the average earning. And this is what they want to capitalize. This is the average earning of the company. This is the average earning of the company. Okay, not okay. Now, working note 1B. Calculation of total capitalized value of the company. Calculation of total capitalized value of the company. Now, this profit is there, no? Which is our expected profit. This is our expected profit. This I have to capitalize to get to know what is the return that I have to get. They're saying thing. 18 lakh is what? Expected profit. Expected profit I'll capitalize. I'll get to know total amount of worth of the company. And then how much money I'm going to get. Now, capitalized value of the business. Expected profit. Expected profit is how much? 18 lakh. 18% means 18 by 100. 18 rupee is the return that I expect to receive in future by investing 100 rupees. Therefore, if my earning is 18, no, not 18%, 15, no, sorry. This is 15%. 15 by 100. 15 rupee, if I have to earn in future, how much is the investment to be done today? 100. Therefore, if my expected return is 18 lakh rupees, what should be the investment? What is the capitalized value of the business now? Expected profit divided by expected return percentage. So 18 lakh divided by 15%. 1 crore 20 lakh is the value of the business. It is the capitalized value of the business. This is the worth of the business today. Okay, not okay. Which means if you sell the company today, this is what you expect to receive. This is what you expect to receive. Now, if I convert this in price per share, how will I get it? Total capitalized value of the business, how much it is? 1 crore 20 lakh, which you just calculated, divided by total number of shares. 2 lakh rupees per share. How much it is? 60 rupees. In amalgamation, we studied something called as intrinsic value. Yes or no? How do you calculate intrinsic value? Intrinsic value. Net assets divided by total number of shares. Net asset means what? This is the worth of the business today. If I sell the business today, this is the net asset that I will receive. I want to know what is it per share. Same thing here. This is the worth of the business. On papers, this is the worth of the business. Total value of the business. If you sell the business today, this is what you will receive. This is the net assets of the business. Divide by total number of shares. So what is the price per share? 60 rupees. Which means imagine foreign company has acquired the share at 10 rupee per share. Imagine I'm telling. And 60 rupees is the worth of the business today. How much did they make profit? Profit is 50 rupees per share. Got it? Not got it. Now, what is the cost of investment? What is the cost of investment by foreign company? 5,40,000. How many shares are they holding? 1,08,000. So what is the cost per share? Acquisition price per share? 5 rupees. Correct, 5 rupees. Which means they have purchased the shares from VR Limited for 5 rupees. And today this 5 rupee worth of share has grown up to 60 rupees. Now you made a profit of 55 rupees per share. So now the question is, how did you calculate this 60 lakh rupees? How did you calculate this 60 lakh rupees? Based on the past profit. Based on the past profit. So last 3 years ka average profit was 45 lakh rupees. Yes or no? 30 plus 40 plus 65. 65 or 45? 65 only, no? By 3 if I did, you said you got 45 lakh. Am I right? This 45 lakh of 40% is the average expected future profits. So if this is the earning of the future, for which the hard work is done by the foreign company today, this is the earning expected in future. What is the investment that they should get? If this is the expected return, foreign company says that I should get a return of 18 lakh rupees in future. The money that I withdraw from this company, no, after selling the shares, I will invest it somewhere at the rate of 15%. I should get how much? 18 lakh rupees. I should get 18 lakh rupees. So if I want to get 18 lakh rupees profit in future, then how much money I want from you? 1 crore 20 lakh is what? Worth of the business. Are you selling the entire business? No. He's got entirely 54%. Got it, not got it. So here we are trying to calculate the total value of the business. So 18 lakh divided by 15%, 1.2 crores is the worth of the business. Got it, not got it.
Worth of business, 54%.
Correct. No, this is the entire value, 100%. This is the total earning. Please understand, when I calculate the value of the business, it is for the entire business 100%. So when I'm saying 18,000 is the expected return, it is not that foreign company's expectation. This is overall company's expectation. 18 lakh, how did you get? 18 lakh is nothing but average of past years ka profit and 40% of that. So this is the expected earning of the entire company. So if the company wants 18 lakh rupees in future at the rate of 15%, what is the worth of the business today? 1 lakh. This is a little bit tricky to understand, but it's okay. It is 1 crore 20 lakh worth of the business. As we proceed, you'll understand. So 1 crore 20 lakh is the worth of the business, capitalized value of the business. Now 1 crore 20 lakh divided by 2 lakh. So what is worth of business per share? 60 rupees. So come back here. Multiply 60 with 108. I'm not multiplying 60 rupees into 2 lakh. We are not going to give entire 1 crore 20 lakhs to whom? The foreign company. Got it, not got it. So how much percentage stakes we are selling? 54% stake. So 60 rupees is price per share. This is the worth of the business today per share. How many shares has been transferred by the foreign company to the Variety Limited? 1,08,000 shares. So 1,08,000 shares into 60 rupees worth of one share. 64,80,000 rupees is the sale consideration, purchase consideration. Okay, not okay. So this 60 rupees is nothing but price of VR Limited as on today. Today's worth per share is 60 rupees. How did I get the 60 rupees? By capitalizing the yield. So what is the yield percentage? 15%. You have capitalized 15% of what? Yield was nothing but average profit of last 3 years, uska 40%. I got how much? 1 crore 20 lakh rupees. This is the worth of the business today. Which is derived based on the past profits. Based on the past profits and this percentage, they have decided the worth of the business how much today? 1 crore 20 lakh rupees on the whole. I want to bifurcate for per share how much it is. So divide by 2 lakh shares. So worth of the business per share is 60 rupees. So now foreign company says that I want this much rupee. If you give me 60 rupees per share, only then I'll transfer the shares to you. Otherwise, not. To which Variety Limited has already agreed. So 1,08,000 into 60 rupees, 64,80,000 is the sale consideration or purchase consideration. So if Variety Limited pays 64,80,000 to foreign company, only then the foreign company will transfer the shares to Variety Limited. Okay, not okay. First part taken care of. Point number A taken care of. Point number A taken care of. In this, if you have any doubts, please ask. Next, working note 2. Calculation of profit on sale of investment, which is earned by the foreign company and its corresponding TDS. So can someone tell me what is the meaning of TDS? Full form nahi pucha, meaning pucha. You are saying tax deducted at source. Achha, very good, very good. Now, TDS is a part of income tax. TDS is a part or a concept that comes under income tax. What is the meaning of income tax? Tax on income is called as income tax. Tax on profit is called as income tax. Okay, not okay? When I say tax on income is income tax, you're not digesting. When company law says, what is a public company? A public company is a company which is not a private company. That you will accept. Wow, 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 wow. Now, tax deducted at source. Tax deducted at source. Source means what is the meaning of source here? Source of income. Source here talks about source of income. Now, what happens? Understand. Mr. A is working in a company. He gets salary every month. Every month he gets a salary of 1 lakh rupees. Imagine if there's no concept of TDS. Mr. A, Lakshita, listen. Mr. A will earn 12 lakh rupees, correct? For the entire year. When does he file the income tax return? The maximum time is next year, July. 31st July is the due date. In this date, if all the people start paying the income tax to the government, imagine during this period, if the government is in need of funds, where will the government go? Government ka one of the major source of revenue is tax. So government does not get taxes on time during this period. They will not have sufficient working capital to run the country. Okay, not okay. So government said that let's do one thing. We will introduce the concept called as tax deducted at source. So the source where the income is coming, no, that itself will take the tax. And the responsibility of this was not put on the head of SSC. It was put on the head of the company or the payer from where the income is getting generated. No, the government has given the responsibility of deducting the tax, cutting the tax at the source by them. So now what happens? Every month when the company pays tax, no, out of 1 lakh rupees, imagine 10% they deduct. How much it is? 10,000 they will deduct and pay balance 90,000 to the employee. They pay balance 90,000 to employee. Now this 10,000 which is there with the company cannot keep it. Company has to remit this to income tax department. They have to remit this amount to income tax department within a given stipulated time period. If you do not remit within the given time period, interest will be charged for the delayed. Okay, not okay. When this 10,000 is deposited as income tax, is this income tax of the company or is it of the employee? It is of the employee. So we are depositing, we means company. Company is depositing the income tax in the name of Mr. A on behalf of Mr. A. Got it, not got it? This is called as tax deducted at source. This is the source of money for Mr. A. At the source itself, the tax is deducted. This is done so that the government gets the money faster than without TDS concept. Okay, not okay. Okay, not okay. In our question, can I say the company which is going to pay the money, sale consideration or purchase consideration is Variety Limited. Variety Limited is going to pay money to the foreign company. So on this transaction, is TDS applicable? The answer is yes. So now Variety Limited, when they are transferring the amount, how much amount? 64,80,000 rupees. On that, they have to deduct TDS. Or not on 64 lakh, on the profit basically. On the profit, you're supposed to deduct TDS. I'll discuss about it. So you will deduct TDS and remit the balance amount to the foreign company. Okay, not okay. Now, on how it is calculated, we'll discuss now. So I'm just trying to put a seed in your mind about TDS. Though we discussed what is TDS little bit in depth in foundation. Now, because of time constraint, I'm not going too much in depth. So now, sale consideration is how much, people? 64,80,000. This is sale value. Will you pay the tax directly on 64,80,000 or on the profit part? Tax is on income. Income tax means tax on income. Is sale your income? No. What is the meaning of income? From sale, if I minus the corresponding expenses, cost, which is cost of acquiring the share, which is 540. Where is this given? In point number B, they have told that the actual cost of the shares to the foreign company was 540. So cost of acquiring 54% stake was 540. If I minus that, remaining 59,40,000 is called as profit on sale, which is before tax. Less tax. How much is tax? 30% the question mentions. So TDS at the rate of 30% if I minus. Balance is profit on sale after tax. Profit on sale after tax. Okay, not okay. Got it, not got it? No, don't ask anything. I'll discuss everything. 1 मिनट 2 मिनट हो जाएगा. क्या हुआ, देखो क्या प्रॉब्लम है?
सर वो 30% फाइनल प्रॉफिट होना चाहिए, टीडीएस का तो उन्होंने परसेंटेज का.
See, with regard to TDS, you don't have to break your head. The question is told 30%, take 30%. And moreover, this 30% does not come from the accounting. It comes from your income tax law. So this particular transaction, you have to see that is governed by which section of TDS. In that section, they have to mention the percentage. So that percentage you are supposed to take. Correct.
ये 30% फाइनल प्रॉफिट का जो हम निकालते हैं, प्रॉफिट आफ्टर टैक्स.
No. You're talking, madam, this is sale purchase of shares. I'm not paying 30% tax on the profit of the company. This is TDS on this transaction. This 30% is TDS on this particular transaction. And moreover, in case of normal scenario where you do the business, earn the profit, on that you don't do TDS. In that, if I'm the company earning the profit, I pay tax. TDS means what? If I'm earning the profit, somebody else is paying the tax. Who is that somebody else? From whom I've earned the income. He will deduct the tax on my behalf and remit to the government. So this is TDS concept. Normal income tax nahi hai this is TDS. You have to be very clear. So now TDS at the rate of 30% is 17,82,000. So this is my profit on sale after tax. Now, what is the net consideration? The net consideration is now very, very important because 50% of net consideration is handed over to the foreign company right now as immediate settlement, and remaining 50% is transferred to loan account, unsecured loan account. So what is the meaning of net consideration? Net consideration means the consideration that I have to pay, 64,80,000, from that minus tax part alone. That is called as net consideration. Net consideration. You can't say, no, 5,40,000 minus, I'll give balance 59,40,000 only. In that, I'll minus tax and give 41,58. Will you accept? If I pay you 41,58,000, will you accept? This is your profit. I want sale consideration. Sale is different, profit is different. So what is my sale value? 64,80,000. Can we transfer this entire 64,80,000 to the foreign company? No, because a part of this is handed over to the income tax department as TDS of income tax of foreign company. This is income tax of foreign company. So the balance amount is to be settled to the foreign company. This is called as net consideration. This is called as sale consideration. So from the sale consideration, if I minus TDS, this amount is called as net consideration. Okay, not okay. Of this, 50% is immediate settlement, 50% is repayable after 2 years. Okay, not okay. This is your liability. This will become your liability of the Variety Limited, basically. Okay, not okay.
Liability of Variety.
किसको पे करना है? Who has to pay? VR has to pay. Subsidy has to pay. Who has to pay? Who's the buyer? Who's the seller? Buyer is variety. Seller is foreign company. If buyer is not paying the money now, who has to show liability? Buyer or subsidiary? Buyer has to show. Now comes the main point. Calculation of goodwill or capital reserve on the date of acquisition of the entire holding. Now listen to very carefully. To calculate goodwill CR, I need two items. One is investment. I need investment. Second, I need net asset. I need investment and net asset. So first we'll calculate net asset. So calculation of net asset. Total asset given in the question is how much? 1 crore is the total asset. 1 crore total asset. In that, they have decided to write down PPE by 175. So less reduction in the value of the PPE, 1,75,000 rupees. So total asset is how much? 98,25,000 rupees. 98,25,000 rupees. Any problem? This is at fair value. This was book value, but not fair. So we subtracted the reduction. That is what you call it, the written off portion. We have revalued it. And now the total asset is at fair value, which is 98,25,000. Less current liability. How much is current liability? We owe 20 lakh to outsiders. So balance money that belongs to company is how much? 78,25,000, which is the net asset of the entire business. Any problem? So here I've taken the net asset of the 100% business. So should I compare with only 54% of investment? And will I get goodwill CR? No. I also have to take 100% investment. So now comes the calculation of goodwill CR. For that, what do I need? Investment. There are two tranches of investment. One tranche of investment is 46% stake. Second is 54%. So cost of acquiring 40% stake is how much? 15,64,000. Sir, how did you get this? Now understand, what is the total share issued by VR Limited? 2 lakh shares. In that, how much was held by? Variety Limited? 46%. So 2 lakh of 46% is how much? 92,000 shares is already held by Variety Limited. If you observe the question, the very first paragraph, they have told that these shares were acquired at a market price of 17 per share. So how much have they given? 17 per share. So what is an investment? 15,64,000 is cost of acquiring 46% stake earlier. So earlier when they acquired 46% stake, they paid 15,64,000 rupees from their pocket. Okay, not okay. And what is cost of acquisition per share for the foreign company? 5%. What is the cost of acquisition for 54% stake of the foreign company? 5 rupees. 5 lakh 40 divided by 1 lakh 8,000 shares. So 5 rupees was the acquisition price. And these burgers have acquired at 17 rupees. Okay, not okay. Now, cost of acquiring the remaining 54% stake is how much? We just calculated. It is 64 lakh 80,000. How, sir? Number of shares acquired is 1 lakh 8,000. And cost per share is 60 rupees. So 64 lakh 80,000. So total cost of acquisition is how much? 80 lakh 44,000. This is the total investment. So Variety Limited is invested 80 lakh 44,000 rupees in the subsidiary VR Limited. Okay, not okay. The money what they've paid against this, what are they actually getting today? Is the net asset. How much is the net benefit they're getting? Only 78 lakh 25,000. So how much extra they've paid? 2 lakh 90,000 is goodwill on the date of acquisition. Extra amount they're paying is 2 lakh 19,000 rupees. So current worth of the business is 78 lakh 25,000 minus 80 lakh 44,000. So 2 lakh 19,000 rupees. Okay, not okay. 78 lakh 25,000 is net asset. Means what? Today's worth of the business. So what is this 1 crore 20 lakh rupees? Expected value of the business. Total capitalized value of the business, which is based on expected return. So return also was expected in absolute terms and percentage also was expected. So basically, they wanted to tell that this is the amount that I expect. 60 rupees is what is paid by Variety to whom? Foreign company. So foreign company says that this is my expectation. Now the question is, how do I derive the 60 rupees? So for that, they gave me expected profit percentage and expected profit in absolute amount. So capitalize this. This is what is the amount I want. This is what is the total worth of the business. In that, my share is how much? That proportionate value I want. Okay, not okay. So that is expected earning, expected capitalized value. This is present capitalized value.
So 50% of external liability are बनने वाली और the reduce
Come again.
जो हम 50% repayable है ना जो external liability बन रही है.
You mean to say this 50%, sir? This 50% is there no liability. This is not liability of VR Limited. Now, when we calculated the net asset, we are calculating net asset of which company? We are calculating about VR Limited. We have acquired VR Limited. We have acquired VR Limited. So investment in VR. So net asset I should compare with what? VR. Yes or no? So I'll get goodwill CR. Now, this 23,49,000, which is repayable after 2 years, is a liability in whose books of accounts? It is in books of Variety Limited, because Variety Limited has acquired the share. So who has to pay to whom? Variety will pay to whom? Foreign company. Whereas this goodwill CR calculation is done. This goodwill CR calculation is done for subsidiary. So to subsidiary, how much did I pay? 80,44,000. To acquire subsidiary ka share, not to subsidiary I paid. To acquire the share of subsidiary, total how much did I pay? 80,44,000. Against that, what am I getting from the subsidiary? 78,25,000 as on today. So 2,90,000 extra I've paid. Because I feel that the worth of the business in future is going to be way higher than this 2,90,000 rupees. How much am I expecting it is going to be? 1 crore 20 lakhs, 120 lakh is my expected growth of the company. So if I pay 2 lakh rupees extra also, how does it matter? Because tomorrow the 78 lakh is going to grow to 1 crore 20 lakh rupees, because that is a valuation that has been done by the foreign company. And over the period, if the profit further grows, so valuation is going to be way higher than 1.2 crore rupees. Got it, not got it? Online people, got it, not got it? Just to summarize what we did so far, the entire objective of this question is to calculate goodwill and CR. To calculate goodwill CR, we need investment, which we have to compare with net assets. Net asset was given in question. Net asset was given in question. They gave total asset. They said, please do the revaluation. We got the balance asset. From there, if I minus the current liability, I get the net asset. The problem was to know the investment. Investment also, there were two parts. One is 46% investment. Second is 54% investment. 46% ka investment ka value is how much? 2 lakh of 46% is how much? 92,000 was the shares already held by VR Limited at 17 rupees per share. So this was the investment already known. I should know what is the investment for acquiring 54% share. So how many shares I'm acquiring? 1,08,000. Now what is the purchase price? 60. Now how to calculate the 60 was the whole term. So how do you calculate the 60? We took average profit of 3 years. That is total profit of 3 years divided by 3. I got average profit. Of that, 40%. So we got 18 lakh. So what is 18 lakh? This is expected future profit. Expected profit. This is the expected profit. This is the worth of the company that they're expecting in future. Divide by 15%. So what is the worth of the company in future? 120 lakhs. 120 lakhs, not 120 CR, it is 120 lakhs or 1.2 crore. This is the worth of the company in future. So they're telling that whatever is the proportionate share in this, how much it is? 54% that belongs to foreign company, you pay us today. So how did we derive this? 120 lakhs or 1 crore 20 lakhs is for the entire company, 100% shares. That is 2 lakh shares. Divided by 2 lakh. Then for one share, how much it is? You got 60 rupees. 60 rupees. That is how we got 60 rupees. So that 60 rupees, if I multiply with 1,08,000, so whatever amount we got, this is the money that we paid to the foreign company. That became sale consideration for him. And for us, it became the purchase consideration. 64,80,000. If I add these both, this is my cost of acquiring 100% stake in the subsidiary. If I compare with the net asset, I'll get to know how much more or how much less I've paid. If I've paid more goodwill, if I paid less capital reserve. Yes, boss.
Any foreign company का investment का cost of capital निकाला. So 54%.
Okay, you're telling that if they ask you goodwill CR only for the transaction of 56%, then here the net asset I'll take only 54% and investment 54%. Online people, the question what they're telling is, sir, what if in the exam same question comes, but they say calculate the goodwill to the extent of acquiring 54% stake. For this, you calculate goodwill in the sense, same step I'll do. It is just that when I take investment, I'll take investment of 54% is this value, and net asset, whatever the value came, no, I'll multiply with 54%. So 54% investment is compared to the 54% of the net asset. I'll get the goodwill CR. Okay, not okay. Whatever it is. Doesn't matter. My whole point is, once again, ma, second place where people struggle is in the concept of TDS, calculation of TDS. And the third place where people struggle is to derive the net consideration to split the amount between 50-50 percentage. So here the problem was sale consideration. No. Sale consideration less cost of acquisition. This is my profit. On the profit, you calculate TDS, not on the sale value. So on the profit income, TDS 30% is deducted, and balance profit earned by foreign companies 41,58,000. Anyways, this point was not relevant. The entire objective of doing this calculation was to get the TDS part. Okay, not okay. Second is, what is the net consideration to be paid? 64,80,000 rupees was a sale consideration. Imagine if there was no TDS, then entire 64,80,000 would have become the net consideration. But since I'm paying 30% of this to the income tax department on behalf of foreign company, so obviously I'll remit the balance 70% to them. So that 70% is called as net consideration to be settled to the foreign company. In that 50% is paid now, 50% paid later. And this, which I'm paying later, is a liability. Whose liability? The person who's acquiring the share. Who's acquiring the share? Variety Limited is a company acquiring the share. It is a liability in their books of account. And do not add this liability to the current liability of VR Limited. Got it? Not got it? Current liability 20 lakh of VR Limited is different. And this 23,49,000 is a liability in the books of Variety Limited. What happened, Puri? Why confusion? Correct. Not in books of VR. We're not doing for anybody. We're trying to calculate the goodwill in CR. In this entire process, Variety Limited has paid how much goodwill in total? Sale consideration for the foreign company we're calculating.
So जब we do it क्या? So two directly question asked.
Sorry?
Question दिया ना find out goodwill of that. So two Variety Limited. मतलब
Correct.
Variety Limited में subsidiary का उनको capture.
It's very simple. They're asking that if Variety Limited is acquiring the shares, no, not 56%, whole share, that is 100%. So in this entire process, how much have they paid and what have they got? You tell me the goodwill CR. So have they paid more to acquire the net asset of the business, or have they paid less? So in this case, they have paid more. How much more they have paid? 2,19,000. So we are doing basically the calculation for the Variety Limited to identify what is the goodwill CR. Okay, not okay. Because this is required in future, no? When I do consolidation, we need goodwill CR or not? That is how we get the goodwill CR. Now tell me, what is your doubt? If this is clear, sorry? Net consideration का बाद वाला calculation. Take it. This is that net asset wala part that you want.
This is the actual final answer.
This is the final answer, right?
Yes.
Guys, if this is clear, I'll put an end to the video here. So we'll take a break of 5 minutes. We'll come back and start with the next new topic, which is consolidated P&L. Right? So can I sign off in my style? Okay. So guys, those are watching recording, not for you people. Those are watching recording. That's all from my side for this session. I'll see you in the next new class. Until then, bye-bye. See you. Take care. Thank you.